Alright guys, let's break down this trade and go over some of the main factors that led me to take it. Now, it all started actually with this sharp 100-point pullback into the 18,015 level up here. As you can see, we have price clearly falling to reach this immediate upper resistance zone around the 200 area, which is a clear early sign of weakness. I think that failure, which triggers a markdown move, clearly here transitions into a redistribution segment. And this type of segments, I should say, typically act as a temporary pause or consolidation in a broader downtrend. And in this case, it preceded clearly here, as you can see from the action, it preceded this 200-point or so slide lower. Now, here is where this high quality setup began to form as price abruptly reverses at the bottom of this nosedive, printing a strong 100-point demand bar, which is a clear sign, I think, of or evidence of aggressive demand stepping in. Now, what really stands out here, though, is the bear's failure to defend the base of this bearish order block. And instead of rejecting price, or at least trying to regain some control, the supply side allows, as you can see, price to rip another 100 points higher. Following that, we see a mini consolidation form above the order block. Now, this consolidation acts as a launch pad, I should say, pushing price even higher, reinforcing this way the assumption that this is a genuine reversal. At the same time, though, such a move confirms the exhaustion of this bearish range, which again reinforces the bullish shift in momentum. Now, keep in mind, guys, that when retail sees a sudden price surge or spike like this one here, the typical response is to FOMO in. Usually what happens is retail traders chase or end up buying near the top, and more often than not, the market makers pull a gap and trap type move, leaving them obviously holding the bag. Now, if you want to avoid such a move, it's crucial to stay disciplined and patiently wait for confirmation or confirmations before pulling the trigger. What I mean by this is that when you see a spike, don't chase it. Let price action show signs first that either buying or selling pressure is getting exhausted, and that's how that is the only way I think that you can get a clearer read on the market's true intent or bias. In other words, allow the market to breathe, which means let it pull back and reveal to you new levels of interest. And I think that such pullbacks or retracements is what helps you identify which zones are actually tradable. And that's exactly what I did with this trade here. I didn't jump in on the initial break of the order block, as you can see. Instead, what I did is I waited to see how price would react on this retest. And what happened is that this mini consolidation I mentioned a bit earlier formed its base, as you can see, above the bearish order block. We also see this wick here testing the order block without actually breaching it, and that's important because this retest signaled to me clear intent, meaning buyers were stepping in and the order block was now acting as support. Also, this move higher that follows here confirms the long bias as price rebalances toward the 900 level. Now, if you are thinking long in a setup like this, there is one thing you do not want to see, and that's you don't want price to just punch straight through, be it through an order block, resistance level, or anything else. A proper retest, I think, needs to happen first before a measured entry can even be considered. Remember, guys, that you should always look for retests or dips before buying. In other words, you want a dip to buy into. In my opinion, the mean reversion approach applies here clearly, whether it's a 300-point spike or a 10-point move to the upside. And I think no matter the scale, buying on dips is clearly key if you want to improve your risk management approach to your trades. That's why, as you can see here, I waited for the pullback to the 860 area or 59 area before actually going long. And even then, I gotta say here, I wasn't just buying blindly, because I saw a confluence at this point, as you know, in this imbalance zone here, sitting above the 18,000 area, that I believed would act as a price magnet. So even if it wasn't a massive run into the 150 level up here, I thought I had a high probability window at this point to catch a clean move into that zone, enough for a solid profit-taking opportunity. As you can see, the trade bias-wise performed exceptionally well, and you know, we clearly have no drawdown at this point. Instead, what we have is a massive spike right out of the gate. By the way, guys, if you found this trade breakdown helpful, make sure to check out my next video where I'll be diving into more high probability setups and proven actually strategies to help you refine your approach. All right, gang, thanks for watching, and as always, hope to catch you all in the next one.